Good evening, market lovers. You're watching the Stock Market India update. I am your host, Siddesh, and bringing you all the updates from Stock Market India. Despite a global technology bloodbath and rising geopolitical tensions, Indian markets chose to look the other way today. The Nifty and Sensex extended their rally for the third straight session, defying weak global cues and proving once again that domestic optimism is currently overpowering global fear. But here's the big question tonight. Is this confidence real? Or is the market simply ignoring warning signs? On Tuesday, benchmark indices eked out modest gains. The Sensex climbed 78 points, closing at 83,817, while the Nifty added 48 points, settling above the crucial 25,750 mark at 25,776. Over just 3 sessions, both indices have surged nearly 3.8%, a sharp bounce that has surprised many, especially when global markets are anything but calm. So what's driving this rally? The mood remains supported by the landmark India-US trade agreement, which has temporarily eased external uncertainty. Investors are betting that stronger trade ties could cushion India from global shocks. However, gains were clearly capped as geopolitical tensions between the US and Iran escalated, keeping risk appetite on a tight leash. Simply put, optimism is alive, but nervousness hasn't disappeared. Sectorally, the story was split. Buying interest was seen in consumer durables, energy, and auto stocks, pushing the Nifty higher. Heavyweights like Adani Ports, Reliance Industries, and ICICI Bank led the charge. But on the other side, IT stocks were brutally sold off, dragged down by a global technology rout. The IT crash deserves special attention. The Nifty IT index tanked nearly 6%, wiping out all of yesterday's gains in a single session. Infosys plunged over 7%, TCS fell almost 7%, and mid-tier names like Coforge, LTIMindtree, and Persistent also cracked sharply. The trigger? A fresh wave of fear after AI firm Anthropic unveiled new automation tools, reviving concerns that AI could disrupt traditional, license-based IT business models. Tonight's big concern: is this just profit booking, or the beginning of a structural reset for IT stocks? In the stock-specific action, earnings ruled the day. Bajaj Finserv edged up after reporting stable profits and strong revenue growth. Team Lease Services jumped over 5% on a sharp rise in profits. Sheela Foam stunned the street, soaring 14% after profits more than tripled. ADF Foods rallied nearly 9% on strong quarterly numbers. On the flip side, Kansai Nerolac, Century Plyboards, and Anup Engineering faced selling pressure despite mixed financial performance. Corporate actions also caught attention. Metropolis Healthcare announced a 3-to-1 bonus issue, boosting investor sentiment. The consolidated net profit rises 31.98% in the December 2025 quarter. Trent reported a stellar quarter, with profits jumping 36% year-on-year, driven by aggressive store expansion under Westside and Zudio. So where does that leave the market? Indian equities are clearly showing strength, but they're doing so while ignoring global tech turmoil and geopolitical risks. The rally is intact, the momentum is strong, but the market is walking a tightrope. Will domestic growth and policy support keep this party alive? Or is the market getting dangerously comfortable? That's the question investors will be watching very closely. With that, we'll wrap up this market update. Stay tuned for more such information, do subscribe the channel, and as always, invest wisely.